Hello, everyone, and welcome to another Mogul monthly webinar. Join with me. My name is Alex Blackwood, co-founder and CEO here. I totally forget to start off with that. And joining me, as always, is
Joey Matata, co-founder and CEO.
yeah. So, hopefully, let's get a quick response. Hopefully, you guys can hear us. We've obviously if you can say in the chat whether or not you hear us, or one of the team members, if you want to rip a quick message to us. I can hear. Perfect. Awesome. Yeah, because last time we were obviously joining you from our company retreat on perfect. Yeah, we were joining you from the company retreat at the Alcaraz property, which is pretty close to selling out actually, and it was a tremendous time. Obviously, we can go into a recap of that, but with that, I think we can jump right into it because last time we actually ran almost nearly overtime,
Yeah,
which was
we did.
crazy, even though it was very hard to hear us. So we do apologize again, but hopefully this time's a little bit better. I keep seeing that number go up. So, Joe, should we give it like one more minute or
Yeah,
one more second
yeah,
before
looks like
people
we have a
come?
good amount of connected folks.
Yeah, we always used to say it was like the GS start time was always 5 minutes later than the actual start time because that drove me wild because then it set me up 5 minutes late to every other call, and it's like, well, why don't we just start on time then?
Yeah, we had to be on time because we were the junior guys. So
But you have to show up and make sure that they didn't hear you buzz into a phone call. Yeah. All right. Well, I think we're kind of getting there. So with that, we're going to start off with just a quick market analysis. Obviously, as we head into the week, crazy things have been happening, whether it be the government shutdown impacting the economy or the fact that tomorrow Powell is going to release interest rates. So Joey's been experiencing some incredible things on the lending side. And so I'd love to turn it over to you and give just a high level overview on what you're seeing in the economy today and what's that outlook look like for Mogul investors.
yeah, for Mogul investors particularly, we have a pretty great network of lending partners, and we typically operate at the rate floor. So rate floor has been revolving in and around the kind of 6.25 range, maybe even starting to peak into the 6 range, which is amazing. So you see a lot of the 10-year interest only uh, loans that we're originating, kind of typically around the 6.75, 7% range, especially for some of the business plans that we work on, like the pad splits and the kind of short-term rentals on the Airbnb side. But now you're starting to see those rates dip, quarter, even half a point lower, and even more activity to come, depending on how the rate cuts go in the next couple of days. Anticipated rate cuts. Sorry, let me back up. But it's really, really great for us because what that means is on the origination side for all these new properties that we're launching, we're actually already seeing quotes come in at the rate floor at 6.25. And we're just starting to dip below that. So it's really, really great stuff. Again, just as a reminder, all loans that are originated on the Mogul platform are 10-year interest only, 30-year DSCR loans, right, which are debt service coverage ratio qualified, meaning the cash flow of the property qualifies the loans, not your personal guarantee. And so we originate those at the Propco LLC level, no personal guarantee required. And then that rate is passed along to you as the investor, with cash flow covering that debt service, and then the rest of it passed along to you through a monthly dividend. So super exciting stuff because again, that's tipping to the 6.25 range, 6 in range, which means that property NOIs only have to yield about 7 to 8% to be profitable, to be accretive. Alex's favorite word as of late, to be valuable to you as an investor by taking out the loan, by having a yield that covers that DSCR plus means that anything that's above that DSCR is not only given to you as a pro rata dividend, right, via your equity ownership of that 6 to 7% on the NOI yield, but also because the debt service is paid off and covers 70 to 80% of the cap stack, that additional yield is passed along to you as the equity holder. So really, really great stuff for equity holders and on the Mogul platform. Yeah.
And obviously, something that's been coming up a lot recently too is with interest rates expected to come down. We've gone over it in the past, and there are two levers that Powell likes to talk about as to when he would lower interest rates. And obviously, we've had an interest rate cut in the previous few months, but there are two levers directly tied to it. Number one, softening of the labor market and the job market. Number two is around inflation. Inflation actually ticked up the last little bit to above 3% now, which is its highest level in a little while, but yet still people are calling for interest rates, which means that there's definitely a softening in the job market. And with so much unpredictability, whether it be around tariffs, I feel like we get a new news alert every day with Trump decided this tariff versus that tariff. Canada bad mouthed us, so we give this tariff. China, we just got an alert that China has agreed to, well, is something about tariffs and obviously the opioid epidemic. Anyway, it was something around the fentanyl crisis. So
Yeah.
really it comes down to the fact that there is a tremendous amount of uncertainty in the economy going forward, which is directly relating to that inflation number. However, the uncertainty is also tying into that labor force, and the unemployment is definitely going to tick up in the next little bit. And so with that, Powell is using the lever that he can, which are interest rates cuts. And interest rate cuts, the reason that it boosts the economy is because of the fact that as money becomes cheaper to borrow, you have more money in circulation. When you have more money in circulation, you have more things that can be either bought or services given, or the economy just gets stimulated over and over again because of the fact that you have more capital free flowing. And also on the corporate balance sheet, too, people are taking out more debt, using it towards more strategic initiatives, which are boosting equity capital markets in relation to it. So, all this to say, interest rate cuts make the economy worse, but too low of interest rates and the economy worse too fast, and inflation goes up, and we have stagflation. Anyway, we've gone over it in the past a bunch of times, but that's enough on the economy, because the rest of it we're going to tie directly into the Mogul properties. Obviously, things have been tremendously fascinating over here, whether it be different properties selling out on a minute by minute basis. I mean, maybe it might make sense to go through some of our available properties before we go through a surprise later on in the webinar. And if you've joined us in previous webinars before, the surprise is pretty I mean, at this point, it's kind of scheduled. So it is a surprise, but we do have a surprise later on. And some of you have actually been getting crafty and guessing the URL way ahead of time. So if we want to rip through, I mean, maybe some of the offerings, like the Malone has a little bit left. If we want to run through some of the underwriting on the Malone,
Yeah,
does that work?
100%. Yeah, I'm happy to kind of screen share some of the live opportunities now.
Yeah, the Malone has only like 33K remaining, so I figure might as well go through that live because people are definitely interested in it, but want to, maybe they're making a last decision there. Alcaraz is obviously boosting up a tremendous amount, so let's rip through the Malone.
Yeah, perfect. So as a reminder, you log into your account, you can see all the properties here on the live page. You go in, you can see the detail on the property itself. So again, the Malone, as a reminder, is a pad split here in Petersburg, Virginia. That's an 8-bed, 4-bath, 2,800 square feet plus. Basis is $315,000 with a 75% LTV, and we are submitting for an 80% LTV exemption, which is tremendously valuable for you as the investor and for us as the Mogul platform. Um, you know, year one rents at 52K plus are actually based off of T12 performance, and that is actually slightly below what post fee income has been post passive fees. What we underwrite as pre-fees going forward in the year one, so just be extra conservative. So again, opportunity right outside of Richmond, really good submarket here, really good micro location, 8-bed, 4-bath, about 2 miles from I-95, which is a very, very busy arterial transportation line in terms of highway access, and also the bus lines that route directly to the zip code here. Reminder, you can go down to the property listings, see some of the comps here. You can see some of the sales comps, as well as rent comps on the pad split profile that we provide through the direct listing. And if you go in, you can see your underwriting on a base, bull, and bear case scenario. So you can go through, kind of play around with what your initial investment is, see what your gains are from year one all the way through year 10 by looking at the calculator on the property page. And then as a reminder, we have the analysis page as well, which I'll walk through in a little bit. So here's the property status in terms of when the property is closing, which will be in November, and then when the anticipated first dividends will be after that first month of operations in November post closing. And then you can see the capitalization right below that. And then as a reminder, you see this thumbnail here for the property in terms of the call to action, the invest now here, and you can see how much is remaining in terms of the equity and what the actuals are based off of the underwriting on right below that. So yeah, back to you.
Yeah, I mean, I guess obviously we love to answer any and all questions as they come in live. So by all means, if you do have questions, feel free to leave them in the chat. If you want to be a little bit more secretive about who's asking the question, you can leave it in the questions point. But this one is definitely named after Carl Malone, who's from around that area. I know people get a kick out of some of the property names that we've gone through. And I mean, one of the questions that I've always had and been getting recently is, you just started entering into the Richmond, Virginia market. What has been the conviction around it? Why Richmond? Why now? We started adding in, obviously, you can see directly that one of the feedback too that we give, and feel free to leave feedback, is we leave the address right there rather than just in the property page. But with that, I mean, why Richmond? Why now? Why the Malone?
Yeah, 100%. So I think macro and micro, right? Macro fundamentals. Richmond is an incredible market, especially a market that PadSplit has been focused on expanding into. And we've been seeing a lot of opportunities inbound in terms of really strong fundamentals on kind of the T12, the trailing 12 months performance on what could be a basis today, right? When you're going through the purchase and sale negotiation and kind of figuring out what that purchase price is going to be and any of the associated credits and contingencies associated with it. Richmond has presented some really good opportunities to us as Mogul investors, and being able to list these properties on the platform. There's a really good pipeline there in terms of active sellers now that are operating in the market that have just started kind of penetrating into the PadSplit platform and have really been co-living operators for years and years. PadSplit is starting to expand as the platform of choice for co-living models that have existed in markets like Richmond and markets like Charlotte, which we have high interest in, markets like Tampa. So this is a really, really good no-brainer, and I know Michael can assess this as well. In terms of the macro fundamentals that we wanted to break into, there's really, really good appreciation potential here, as you can see on the past 5-year market value increase of 46.4%. And then in addition to that, rent increases have been really solid as well across multifamily, long-term rental, and short-term rental of about 29.2% over the past 5 years. So fundamentals are really solid. We're looking at projections that are also in line with the past 5-year performance, and all the opportunities that we've underwritten in the area that are worth listing. We've been seeing NOI yields of 8 to 10% plus. And again, on that, now 6 to 6.5% APR on the loans that we're originating. It's just tremendously valuable and accretive, as we like to say, for you as the equity holder. So definitely really good opportunities in this market.
So we got a few questions right off the bat. So do you pay, well, number one, Davis, you can, so many Fortune 1000 headquarters moving to Richmond. I mean, Richmond definitely has been directly on our radar there. And so Janet asks, so do you pay interest dividends monthly or quarterly? We target monthly. And so the third Thursday of every month, we pay out for the previous month's operations. So last Thursday, right? Was, or 2 Thursdays?
2 Thursdays.
Jeez.
Or last Thursday, correct?
No, 2 Thursdays ago, because it was right
Was it?
before. Yeah.
1, 2, 3. Yep,
Yeah.
the 16th.
Yeah.
That
Yeah.
was the third Thursday.
Yeah. All right. So 2 weeks ago, we paid out for September. In November, we'll pay out on the third Thursday for October, the whole operation. And your dividend start dates, the minute that you invest is the minute that that ownership count, the calculator kind of starts, or timer starts, and you'll be allocated. So for instance, in the Johnson 2, we obviously just closed out that property, which is our biggest raise to date, which we're very excited about having closed out. Premium property out of Austin, Texas. That one, if you had invested before the end of October, you'll get part of October's dividends paid out in November for your hold period in October. So a few of the other questions too. Max says, I live, sell in the area, and we'll be buying a piece of loan. Thank you for that. Yeah, I mean, that one is about to sell out, so definitely would jump on it before that 30K sells out. Typically, when the remaining point happens, it's kind of when it's like 20% remaining is when that switch is flipped and it shows the amount remaining. And so I would definitely jump in, because we do see a rapid acceleration of sell out for it. How long is the hold? 5 to 7 target year, 5 to 7 year hold period target. That's typically when the IRR plateaus. I know I've been rattling off a bunch of answers, but these are just kind of mechanical questions. I feel like. So
on the base case, just as a reminder, if you look at the analysis tab, we underwrite all the properties on a 10-year standard hold. That's because they live perpetually on the Mogul platform. And as Alex mentioned, 5 to 7 years is the standard hold, and we actually will be releasing a secondary market where we mark the assets to market, sometime in 2026. And so, ultimately you choose the horizon, right, of how long you're going to hold your assets, but we underwrite it on a 10-year standard IRR hold.
And then some of the questions that we got in the questions area is, if you extend the loan to 80% in the Malone's case, will you reduce the total raise amount? What will that money go towards?
Correct. Yeah. So exactly. So if you were to, extend the LTV up to 80%, you're obviously going to be getting additional proceeds, which reduces the amount of equity needed to close in the entire cap stack. So Normally, if that happens post raise, we actually release an update through the email system. Well, you will receive an update as an existing investor, giving you the option of to remain in the asset, right? Or in the case of a recapitalization, we will let you know where those proceeds will be being used for. So most of the time, they go into the vacancy and maintenance reserves to be used, therefore, as additional reserves if anything were to come up on the property on maintenance side. But if it is early on in the process, they will actually be fully recapitalized and kind of used as property proceeds going forward in terms of sources and uses. So.
And then Mogul Syndicate is a great idea. Thank you for that. Quick question: how can it already hold 24 properties before fully funding? So the idea is typically purchase agreement goes down. When purchase agreement goes down, the timer, so to speak, starts, meaning the close period is, let's say, between day 0 to day 45. During that time, you have obviously the inspection contingency period, which is upfront. You negotiate any inspection seller closing cost credits. Once that happens and the cap stack is mostly baked to the point where execution risk is de minimis and we have a cap stack that's in place that is largely accretive to our investors, that's when we will go out and raise capital on the platform and raise it between day 7, let's say, to day 45. Now, during that period, we'll raise out a total amount. If the total amount of the asset isn't raised out, we at Mogul will use our balance sheet to basically acquire whatever's remaining and continue to syndicate it down over time. So the idea being that, let's say, 80% of the property is bought out, but day 45 comes, then we will actually put the remaining 20% in and continue syndicating down the 20% as over time using our balance sheet. How are you finding properties all over the country? I mean, this is just acquisition thesis. So I guess run us through, Joey, the wizardry that the supply side has.
Yeah, so we have incredible supply side partnerships all over the country, a lot of vertically integrated operators that do property management and also have brokerage capabilities, meaning that they have their ears really close to the ground in the market and work with a lot of sellers who want liquidity, a lot of sellers who have been operating these assets for 5+ years and are looking for exit opportunities for a fair but not premium discount. And so Michael and I will go out and source these opportunities all across the country, looking at business plans across short-term, long-term, and mid-term rentals to effectively list them on the platform, making sure that they actually underwrite within our buy box on the base case scenario. And again, that buy box is typically 8 to 10% NOI yields on what we would attribute the current basis today in terms of the purchase price that we're thinking to negotiate in the purchase and sale agreements, making sure all 3 contingencies are in there across all opportunities on the platform, and making sure that those business plans are tried and true, right? So we typically like to see at least 12 months of performance for not upstarting a property, and it's been really, really valuable for all of us.
And then continuing along with some of these questions we got, Marshall mentions regarding the recent Alcaraz update, it states that the seller will remain actively involved in revenue management. Can you explain what this means?
Yeah, and sorry, I was just reading Joe C's question actually. Can you repeat that one more time?
Yeah, it's Marshall's question first. Regarding the recent Alcaraz update, it states that the seller will remain actively involved in revenue management. Can you explain what this means?
Yeah, absolutely. Anthony, so he's actually one of the brokers that we work closely with in and around the Atlanta area. As a reminder, Alcaraz was one of the properties that we actually stayed at for our retreat. And we had the chance to kind of, go through a lot of the business plan, like understand where a lot of that revenue management was coming from in terms of the actual revenue projections of the property, in terms of the base revenue projections that come from renting the property itself. And then in addition to the assets that are included with the property, like the boats, for example, which generate an additional about 27.5K of revenue a year that we're not even underwriting in base case. So the seller themselves, when we went through the renegotiation that you got in your email update today, is that they'll be maintaining a significant equity portion of the property capitalization going forward. And so that way interests are aligned. So that way they continue to optimize revenue as much as possible, being that they're local, that they manage the property, that they've owned the property for the past 10+ years. And they can actually help us, optimize that ADR, that average daily rate, and also the occupancy of the property going forward. So that's how we've kind of aligned interests. Is part of that difference in terms of the appraisal gap was that the seller would actually maintain equity to make up for that. That way we didn't have to come out of pocket for it, if that makes sense.
Of course. And are the properties currently listed on the properties currently listed Wait. Sorry, I thought I was losing my mind there. Are the properties currently listed on the property but not closed set for interest rate, or are you saying there's a chance they will close at 6 to 6.25 instead of basically is interest rate locked and will they come down potentially in
Right. So
deals?
we've continued to underwrite all properties at about 6.75, 6.75, just because we want to maintain, being conservative, right? With all our base case underwritings, as we always usually say. We're just now getting quotes on new properties that we're submitting in terms of like the actual quotes that you then move forward on, right? When you go into loan underwriting, which happens usually, anywhere from 20 to 30 days pre-closing on these assets. So any live opportunities that you see that are just listed on the platform are starting to get quoted sub 6.75, 6.75. But right now we're underwriting everything at 6.75. That way, the returns that you see, if they do end up closing below that, that will just only be a accretive benefit to you, more valuable, in terms of the rate that we're getting.
And then we got one from Joseph Cacciapaglia. So
there he is.
how are we doing, Joe? For the Swift, if I understand correctly, the appraisal came in low, and instead of getting an additional concession / price reduction from the seller to make up the difference, we opted to just increase the loan amount and chalk it up to the value of FF&E that we're getting with the purchase. Is this accurate? If so, can you please talk a little bit about that decision?
Yeah, 100%. So the appraisal did come in relatively low to where the purchase price is, and so naturally that triggers a retrade, right? You have different levers that you can pull, obviously, as the buyer, the potential buyer. So one, FF&E in terms of the conveying furnishings that are included, we have to itemize that, value it to what it is, and actually like decide whether or not that's being included in the PSA as a conveyance. That was a massive, point of discussion when looking at the Swift. And in addition to that, obviously, we were submitting for the 80% LTV exemption, which is accretive to the underwriting. So when we're looking at the Swift underwriting in terms of the analysis tool, what we do is we stress test it, and we actually go through and see what happens if we incorporate all of the active negotiations that we're making in terms of the addendum to the PSA, sellers meeting us, certain percentage, we're making up a certain percentage of the purchase price to appraisal gap, which is always been relatively low. I mean, sometimes it'll go anywhere from 2 to 5%, anything from 5 to 10% usually triggers a broader issue, like we had seen on some opportunities in the past where we actually end up canceling the contract. But with this opportunity, this was the Swift in particular, we looked at what the FF&E would be valued at on an itemized basis, also looked at what the 80% LTV exemption would do to the underwriting, made all of the net changes, pushed those along in terms of what that actually did to the year one yield and the IRR, and then made sure that it was accretive, because if it were dilutive, if it actually brought down the returns from a yield or IRR standpoint, that's when we would have to put it up to a vote of whether or not you would have to stay in the asset itself. So passing along all those changes, seeing what that does to the underwriting, that's what we did in that email, and that's why you received that notification.
And then it was a net increase in IRR
of 0.2%, correct?
Yeah. So or 20 bips.
20 bips, as we like to say.
All right. So Michael said, "What's going on with the WAGs?" I mean, yeah, definitely get into that one.
Yeah, that's an exciting story, actually. It really is. So for anyone that doesn't know, and I think we briefly discussed this before and sent out some email updates for existing investors, we actually had our first title claim on the WAGs, which is the property located in Houston, the Fagan Street opportunity. So long story short, 2 owners ago, it wasn't caught on the title policy or an exclusion on the title policy exclusively, that there were 2 previous owners that ran a company called Premium Van Lines, without getting into too much detail, and effectively committed fraud by taking out liens against the property via different lenders that weren't, MLS verified and weren't, national Fannie Freddie lenders, effectively letting them lend against their equity holdings in the property without it formally being recorded on title and without formally the owners at the time actually knowing that it was happening. So when that property transferred ownership via the owner before the Propco LLC, it was not caught, it was not disclosed, and it was not included in that title policy at all. And so naturally, when it was transferred to us, it was also not caught, and it was not included in the title policy exclusions. So long story short, we are actually in about 4-way lawsuit right now to recover damages for operations of the property, in addition to our entire cost basis of purchasing the property, given that one was actually fully auctioned off on an auction site, more recently auction.com, to another mortgage broker. And so, we can't formally say whether or not this will be an accretive or dilutive outcome to our investors, but we can definitely let you know that things are going really, really well in terms of what that lawsuit will look like for all WAG's equity holders, because as the current owner, you have to be made whole. I mean, it's that's part of what Tyler policies are for, unless the exclusion is caught at closing and unless it's specifically stated in the title policy that everyone was aware of the liens against the property going into the transaction to sellers later, then it would be a liability issue, right? But the fact that that wasn't obviously included in the exclusions means that we are what's the word, like, I guess, entitled to damages, right? And so that's what we're kind of pursuing now. It'll be a 30 to 60 day kind of time period before we get a formal update on what the settlement is, but it will very, very likely be very valuable to the equity holders.
Are we allowed to say what Greg said, at least, like when you first called him on it?
Which portion? Which line?
The lotto?
Oh yeah. Our legal team liked to joke that we won the lottery by being involved in something like this. One, because it's super, super rare. Two, because it is a massive liability issue for lenders and title providers alike. And so all title providers have to take out insurance, right? Title insurance. That's the hit rate for in terms of title insurance claims that actually go through is, I think, less than 0.1% or 0.05%. I remember quoting this to you.
Well, it's funny because it's every use case for blockchain too. It's
Right,
like
is
it's
exactly
trying
this.
to get rid
Yeah.
of the edge use cases because it's this trustless transparency where the idea being that you don't have to rely on third party bad actors
Right.
and you can basically eradicate them from the system. And this is an exact use case for blockchain and real estate happening in a real estate company, benefiting our end investors, mind you.
Yeah.
And at this, like, once this is settled, there are going to be a lot of case studies. There are going to be a lot of case studies. So
Similar to
blockchain,
our
yeah,
insurance case study that we have on payout for landlord insurance, right, for loss of use, that will actually be directly applicable to this one as well, because any loss of use that we had with the WAGs that wasn't in full stabilized operations due to this incident will also be recovered through that lawsuit, and that's at least guaranteed. So
that's
yeah,
crazy.
yeah, it's awesome, but also very unique and scary, and it happens. Yeah, it's a pretty wild story, but
Yeah, I remember you being like, "Yeah, we got a notice on the WAGs today." I was like, "Yeah, okay," and then
yeah.
you're like, "Oh, yeah, it's definitely a prankster." And
Yeah,
it's a
notice on the
weird
front
prank.
door that the
Yeah,
property's been claimed by someone. Not usual. Yeah,
yeah, like
usually
that.
there in the office you see
That's
that.
never happened. We called Greg. It is happening, and it's gonna benefit you. Anyway, uh, Brent asks, how many new properties will come on the platform each month approximately? Will this increase over time, e.g., as more investors join? Exactly right. Right now, we're targeting about 1 to 2 per week. We've actually started upping it. If you've noticed it, it's usually about 2 per week. We launched them in quick succession now, but we will start to add more and more. I will say the sellouts have been rapid. Our team has been growing. I think we're at 9 to 10 full-time team members, which is crazy. So things have been going insane over here in a very net positive way. Our focus is, of course, continuing on the quality of all this. So we're very much looking forward to the next little bit, but we are launching on average 1 to 2 new properties per week. So you can think about 4 to 8 per month. I would say 6 to 8 per month,
Right.
more realistically. So that's good there. We are adding a lot more investors. It's been rapid, rapid, rapid growth, which is crazy. Are any of the Avalanche blockchain contracts and or wallet IDs being made public? Will they or have they already? Is it possible to get a link to the Snow Trace Explorer added to each of the property pages? If Mogul ever disappears, it would be good to have transparency. Yes, Brad. It's all actually available currently. So go to any property you're either invested in or any property that's currently available. Go to the operating agreement, go to page 42. That actually gives you the link to the exact smart contract of the asset. Now, if you go into it and you click contract address and read as proxy, you scroll down to, I believe it's 19 or 21 is token info. You throw in the ID where it says UINT 256. When you throw in the ID there, you'll actually get spit out the operating agreement, the PDF, everything. So go into any of these, you can see it. We're very public about it. As for your wallet address, if you want to see your specific public wallet address, go to your wallet page, go to USDC, for USDT, where you deposit it, copy that link, paste it into the Avalanche no trace, and you can actually see your wallet holdings in real time. As to if ever Mogul goes away, it'd be good to have transparency. We completely agree. That's the benefit of blockchain in the worst case scenario. And keep in mind, things have been going incredibly well. So we're very fortunate right now and we're very excited for the future. And so we at least are around for the next 10 years, which is pretty cool. But the idea behind blockchain is in the event of worst case scenario, we would transition strictly over to an email and you'd get access to your wallets. And then from there, property managers would communicate over email rather than the pretty UI UX. You'd get distributed dividends instead of monthly, maybe it turns into quarterly. And any major decisions would again just go through property manager to you all. So that's great to know there. So Brad, let me know if you have any questions on that. Of course, OMG, you guys are awesome. Thank you. Thank you. Appreciate that. Yeah, it was. Anyway, Dan Dixon, is there? Isn't that? No. Oh shit. I was like, that'd be sick if I think it's like the head of A16Z crypto is Chris Dixon, right? He's the one that was like writing the anyway.
Oh yeah,
Yeah.
yeah.
Is there any way to see monthly dividend for actual for each property for evaluation of potential secondary market investment when that becomes possible? Yes. I mean, we're very excited for the secondary market, and we've been kind of throwing around the idea, and especially now as we've added on more team members, we have a lot more opportunity to look into it. But on top of that, too, we've been growing so rapidly that the secondary market is on the horizon. And what we've been talking about too is the repricing strategy of assets on the go forward and how it'll kind of follow this natural trend of you get repriced into year one yields on a sustainable basis, assuming that appreciation matches the inflation of the top line revenue and the inflation of the OPEX. So technically, margins should hold, but theoretically speaking, the yield on year one yield should continue pushing out if you buy into it. So you will be able to see that. We'll continue to kind of show you along the trend line, not to mention the asset value. And yes, that will be definitely available. I mean, 732, we've actually gone into it. We appreciate all of the questions and definitely feel free to rattle off more. I mean, at this point, I think the people, I don't know, Joey, do you think like we're ready? Yeah, they're ready.
Is everyone ready? Are we ready?
Are we? I don't think we're ready. Yeah, wait, actually, didn't someone on this call recommended a name of a property named after a baseball player? I actually think this is the baseball player that was referenced. Anyway, new property. Boom, the Freeman. Did someone reference the Freeman last call? I'm actually genuinely curious because I think it, if I do remember, someone referenced the Freeman or some Dodger. Oh, there it is. No, the Jeter. Yeah, I completely agree on the Jeter. Unfortunately, the Yankees got absolutely destroyed, much to Ryan, our engineering team's dismay. But there's the link to the Freeman. And Joey, take it away.
All right. Yeah. So the Freeman here, 10 bed, 4 bath, 2280 square foot property out in Houston. So this one is actually the same seller as the Singletary, and it is similar developer as well. We actually work with a great partner down there who does a lot of the refurbishings on the pad splits that we have been capitalizing in Houston. And so he's a great partner. We'll continue to do a lot of them with him. But he also did this one as well. And again, same seller as the Singletary. So this one is a 325K purchase price basis, off market purchase at right now 75% LTV, but being submitted for an 80% LTV exemption. This one had actuals above 56,000 in terms of post fee income, and we underwrote it at 56,880 in terms of the pre fee income. So again, this one's located out in Houston. You can go and see the sales comps here. Per usual, as I showed you on the previous page, you can see the base bull and bear case underwritings in terms of year 1 through year 10 yields and appreciations for your cumulative underwriting return through those 10 years. And then you can actually go in and hit that analysis tab and go to the analysis tool as well to play around with the assumptions if you want to see what different inputs will do to your outputs in terms of your yields and your 10-year returns. So this one's going to close in December, and we will pay the anticipated first dividends out in January for that first month of operations, which includes that prorated amount, given to us as the buyers in December, which is incredible in terms of the quick turnaround on that. Again, you can go see the capitalization, total sources and uses, right? So purchase price plus debt, you'll get, or purchase price minus debt, you'll get the equity that you need to close, and then capitalize reserves and closing costs in addition to the platform fee. Total offering amount at 163,000 there. See the hold period, the potential target secondary liquidity option next year, and then you can go in and actually see where this property is located, kind of dive into some of the micro location fundamentals. Per usual, we have the macro fundamentals here in terms of past 5 year rent increase performance and past 5 year market value increases. We love Houston as a market, can't speak more highly about it. And then you can go down and see, a lot of the documents associated with the closing in terms of operating agreement, purchase agreements, and then the management personnel, as well as who is brokering the 10-year interest only loan for this property. So I'll pause there before we go into the analysis tab. But any questions that might come up, any excitement, any investments?
Yeah, if you refresh, I think we actually got shout out to our engineering team for developing a new investment alert system. There it is. Boom, near 16K in the first few minutes. So appreciate that, investors. And by all means, I do think this one will definitely sell out pretty quickly because we're nearly 10% of the way there, and it's been a minute or two. I think if you refresh, wait, no, that was into the Malone. Anyway, yeah. So by all means, I would recommend just do your own research, but this one definitely will sell out fast. I mean, it's 153K roughly, 160K, and Singletary sold out within like a day or two. So we're going to continue. By the way, as we add more investors, which is beautiful, it's a self-fulfilling prophecy of the closing timelines. Maybe we can start to rapidly expedite those. We can start to add. So things are getting better and better with each new investment. You wait, hold on.
I was going to share the analysis tool as well, so we can go kind of a deeper dive into it.
And then Brent asked, how do you accommodate park? Of course, you want to go into the analysis, you nerd. Yeah. Thanks a lot, man. If you're fresh, I think we got another cool investment.
Great part, as you can see here as well.
Oh, there you go. Bingo. Boom. 20K already. So that's pretty cool. How do you accommodate parking on a 10-bedroom pad split?
Yeah, so I mean, as you can see in the first picture here, there is a carport as well as a pretty lengthy driveway that fits about 6 spots in terms of parking, and then there's also parking along the streets as well. A lot of our pad split tenants typically actually don't have their own cars, and that's why we like to be located along transportation arteries in terms of public transportation, buses, metro systems. So we do like to leave parking optionality, and usually there definitely are a couple of car owners that are staying at our properties. But again, a lot of them are transitory employees, whether again it be like traveling nurses, warehouse employees, pilots, etc., that are, again, doing those like 3 to 6 month stays right in a specific location and might not own a car. So there's always the optionality, but that's typically how it works.
Yeah, man, I don't own a car, so
you don't. Yeah.
Yeah. Yeah. So I mean, you're a Tesla holder.
Whoa.
Wait, why was that?
And then we had to get
that didn't get political.
Pretty crazy. We had to get the sticker down.
I wasn't trying to be political at all. Also, it's pretty tough to be political because technically it's environmentally friendly. Yeah. So great. Yeah. He uses Grok actually a lot and loves SpaceX too. So I don't know if there's any. Anyway, how are the comps chosen? Are they also pad splits?
Yeah, so on the sales comp side, right, we have to make sure that we have comparative market analysis whenever we're looking at bases of properties. And so we take those out from our brokers directly. And then in addition to that, we get the formal appraisal, which has comps that are selected on the sales comp side, right? And so that helps justify the basis of the property in terms of what we're willing to pay on the purchase side. Rent comps. So typically, we like to do our own background diligence on the pad split side. We do list public Airbnb short-term rental comps, but we don't like to list pad split comps specifically because a lot of the pad split comps in newer markets that we're looking at are apples to apples. And T12 revenue, when it comes to a trailing 12 months performance on a property, is a lot more telling than what a property, say 1-2 miles down the road, that's a 4-bedroom, 4-bath pad split compared to a 10-bedroom, 4-bath pad split. It's very hard to do apples to apples, and it's not as I guess like standardized as a market as like say like short-term rentals are. So right now it's very, very telling to look at T12 performance on pad splits instead of what other properties that are unlike the property are doing in a similar area. So that's why we don't list the rent comps specifically, but you are welcome to go on the Patsy platform and look up comps. They have a really great tool as well to see kind of what average occupancy is, average monthly rates are for properties in the area. And we do like to justify kind of our average monthly rates and spot check them according to what the current tenants are paying in terms of their average monthly rate.
But I think also he wants to know for the comps that we have here.
Yes, so these are the sales comps.
Okay, yeah,
Correct.
yeah.
So this helps us justify the basis of what we're willing to pay on the property, and these are directly taken from the comparative market analysis on the sales side in terms of what we're looking at from our brokers, as well as the formal appraisals that come in to justify the value that the lender is actually willing to lend against, right? To again, triple spot check what that purchase and sale agreement value is.
And then Brad, just FYI, it seems to take some time, always take some time, hours in the day maybe, before we as users can see the amount invested on new properties. So that's actually because you're part of the VIP pre-sale. And so it's not a publicly listed unhidden asset. And so we're actually going to work on a change that. I completely agree with you. And so it won't show up technically in your portfolio. The investment is settling. Do not worry. It's counted as the day that you invest in. But if it's not shown on the main investment page in the properties page, then technically speaking, it'll be hidden in your portfolio as well, even though you're invested. But however, if you see that your investment is successfully created in the notification section, that would basically, that confirms that it's obviously going through on there. But I completely agree. Some sort of UI UX around it. We definitely want to kind of update that feature. We're adding new features here and there. So thank you for that feedback. I'll actually reach out to Aton, who can help out on that exactly. And so, yeah, if feel free again, if you have any questions, to drop them in the chat here or in the questions spot, because we are more than happy to answer. By the way, too, on the site, if you do message us on the Chris chat, there are humans on the other end of that line. So just as a heads up, we've seen some pretty funny screen names there, but at the same time, too, I had one person on a Friday night ask me, "Are you human?" And I was like, "Would a human say this?" And then I said something ridiculous. But anyway, yeah, I won't say that here. Whoa, if you refresh the page real quick, I think we got some pretty significant investment.
Oh, wow.
Scroll the top. Yeah, there it is. Boom. Nice. So we are nearly halfway to the down payment, which is pretty cool in the first 10 minutes, which
Over
is,
half,
yeah, there you go. Yeah, just, and then any other questions, feel free to just drop them in the chat, or feel free to reach out to us on the questions, or leave it in the crisp. Feel free to have a funny conversation there too. We definitely get some a kick out of some of the names that we've seen come through. Padsplit is showing 3 open rooms right now in the Freeman. Is that a concern, or are they likely to be filled before closing?
So a lot of the stipulations that we have in the purchase and sale agreements is that it has to be delivered with a certain occupancy. We were aware that there was some turnover going on. And again, the T12 is based off of the actuals that were received on the Patsman platform. So we wouldn't be going off of any occupancy that have been reflected over the past 12 months. Like that would have been included in the actuals that we were given to actually conduct our analysis. So what you see on the go forward rents in terms of this monthly rent is actually fully inclusive of what we've seen on the average monthly income post fees from the pad split. So that would have included any occupancy. So to answer your question, we are going to make sure that this is fully occupied going into year one or month one and year one operations ultimately. But yes.
Yeah, great question there. And yeah, I mean, that is, any other things that we want to cover on the pad split? I mean, the Freeman, obviously named after Freddie Freeman, who hit a home run, walk-off home run yesterday in what, it was the 18th inning, I think. Crazy stuff there.
Was it 18 innings?
Yeah.
That's insane. I wasn't aware.
Yeah. Larry fell asleep in the 7th and woke up in the 18th to the home run.
Wow. That's
yeah, that's a crazy. Yeah. Aren't you, wait, what are you a fan of? You're a Giants.
Oakland A's. Yeah, and San Francisco Giants as well, but I grew up an A's fan. Cesar Chavez, Nick Swisher. I will always recommend it. Remember him as an Oakland A's, even though Alex remembers him as a Yankees playoff winner.
Yeah. Well, also World Series winner. Yeah.
Playoff winner.
2009, baby. Yeah, against the Phillies. Sure. Yeah. Thank God the Phillies. Well, thank God the Phillies are not in the playoffs. We are legitimately, like, I'm not a superstitious guy by any stretch of the imagination, but every time the Phillies have won the World Series in the last X amount of times they've won, there's been a Great Depression to follow.
Is that true?
Yeah, 2008, Phillies won. 87, I think, market crash, Phillies won.
Oh, wow.
Like it's the market hates Philly. Like it's that's just an absurd. Yeah, they beat the Phillies in the '09 series too. Yeah, crazy stuff. Is your goal to keep trying to onboarding split of short-term rentals and plaid splits? Yeah, I mean,
Correct. Yes. So you will see more diversification of assets coming forward. I know we've been launching pretty much exclusively pad splits, which it seems like everyone really loves. Obviously, near-term yield is really, really important, when you're looking at your investment. And obviously, it's great to have that instant gratification. But yes, we will definitely be splitting the product in terms of focusing on 3 different business plans, mostly short-term rentals and mid-term rentals right now. But if rates keep dipping, you might even see long-term rentals make a return. So it depends on the opportunity, depends on the actuals, but we will never not justify those buy box bases in terms of NOI yield and cash on cash yields that we need to be able to list them on the platform, regardless of business plan. So,
and it definitely speaks to the nimble nature of the investment thesis that you have, because too many times these major mega funds that occur raise on a specific investment thesis,
right.
and the minute they're done raising, they have that investment thesis upended. Like you'll have an interest rate increase, and all of a sudden Class A office is just horrible.
That's true.
And so like you'd rather invest in a corporate bond, but you're pricing the Class A office like a corporate bond anyway. The idea is, because the supply and demand is matching up synchronously, you can invest in the best investment strategy at that exact moment, rather than in some sort of deployment horizon over the next 6 to 12 months that we have to do because we're constricted, because that's what we raised on. But the idea is we're changing the mix constantly to evolve with the new interest rate environment. Obviously, short-term rentals and mid-term rentals. We had actually started out completely thinking long-term rentals was it.
We did.
Then interest rates obviously blew up. As a result of that, we went into the short-term and pad split game. And then from there, obviously, interest rates are starting to come back down to earth. So we're starting to entertain NOI yields on long-term rentals potentially. Who knows? We're not going to obviously promise anything there, but that's the beauty of this. We're constantly looking at markets as they continue to fluctuate. We're constantly looking at new investment theses. I mean, Austin, we did not want to invest in last year.
Correct.
Austin,
Yeah.
now we are investing in.
That's exactly right. Yeah, a year ago, if you would have asked me or Michael, we would have said absolutely not. Austin, we're not touching, right? Because it was so topped out on growth. It was so saturated, especially on the short-term rental side. And then all of a sudden, a year later, you see incredible opportunities that are achieving NOI yields 10% plus on what a basis would be today, right? And it's all about that capital markets kind of treatment in terms of where values are and what people are willing to sell and trade and buy at versus like what they're actually operating at, right? And so those rent increases versus those appreciation increases actually come into play really, really well with each other, especially in a buyer's market right now, because we can ultimately determine what that basis will be at, and then ultimately determine what your year one yield will be at on that basis, right? Because we're the ones negotiating against these sellers who are, putting the properties out on the market for a specific price. So great segue question by Brad. Multifamily and small apartment buildings ever considered? Absolutely. I mean, to be honest, if long-term rentals will make a comeback on the platform, it will be that 2 to 4 unit long-term rental kind of more density product. So think pad splits, think co-living, but more so on a duplex, triplex kind of basis rather than just 8 bedrooms in one home. It's more like 12 bedrooms across 3 homes, right? So it's a little bit more density across 3 or even 4 separate units. And right now, 2 to 4 unit single family rentals are actually still classified as single family rentals. So you don't have to get any specific commercial financing when it comes to multifamily 4+ or 5+ units. That would also be attributed to typically higher interest rates and additional guarantees on top of what we can structure in our 10-year interest only loans. So really, really excited about this 2 to 4 unit product. We're working on some cool stuff now. And again, as Alex said, can't promise anything, but you might see some really great opportunities coming out in the next few months.
Also on top of that too, if you think more generally and broadly speaking about the investment area that Mogul can play in, which affords it a greater competitive advantage, single family rentals is that exact area. So if you think about what's happening in any market, the only way returns happen is if markets are inefficient. You're seeking alpha, so to speak. And that's why more and more investors are going further and further downstream to less and less efficient marketplaces, because exactly of that. You have Blackstone entering the build to rent single family rental community space because of the fact that it's a less efficient marketplace than the commercial office industry. You have the proliferation of search funds separate from real estate investing in small mom and pop businesses on a roll up because they're priced inefficiently in market and you can get outsized returns relative to the amount you're investing. Now, when you think about that as it relates to real estate, single family rentals on an aggregation style model, there's really not a player outside of it than us. And when we come into a space, you can get better pricing. You're getting assets that are hitting before they even hit the open market, 30, 60, 90 days before they even hit the open market. You're getting better loan pricing because you've done economies of scale on an aggregation style strategy. All these things means that we are the Blackstone in this specific pond, so to speak. And that's a beautiful thing to be in. When you start to swim further upstream into different multifamily product, there is a risk of running against sharper elbows. And the idea being that if you're running against sharp elbows, the market is more efficient and it leaves less room for risk adjusted returns to outperform the market. And so we do want to play in the space that is beneficial to us, which is residential real estate, and that's why single family rentals in particular are attractive. Now, if we were to enter, it's exactly like you said, density, smaller product that we then can get higher returns as a result of the risk that we're taking. Um, Renard mentioned, that's a brief segue there. I know that just cut immediately into the other. I just realized that Renard mentioned, is a pad split such as the Malone ideal for off-campus housing since it's near a university?
Yeah, 100%. And just to get a little bit behind the scenes, PadSplit does a really, really good job of facilitating renter demand on their platform. That's one of the reasons why they're the biggest up and coming co-living platform, is because they have an incredible amount of pent up demand for supply that isn't even already listed on the PadSplit platform. And so a lot of those are student housing candidates. And so they actually apply through the PadSplit platform to rent apartment style units via bedrooms at a much cheaper basis in terms of monthly costs that are again along these kind of transportation arteries within major cities that have these large universities. And so to answer your question, absolutely, Renard, there are definitely a lot of student housing renters on the PadSplit platform, and we have a lot of them in our properties as well.
Yeah, I mean, can anecdotally too. I was in Boston with the Pad Split team at one of their events, and when I was talking with the president over there, they basically said that, I mean, he was a law school. He went to law school, and he's like, I just needed a room because I was in the library so much, and so anything that can just get me a room somewhere that I can rest my head at night, that's exactly what I'm going to go for. And so a lot of the occupancy in different cities, the tenant profile depends entirely, obviously, on what it is near. And so, for instance, the Boston pad splits are more prevalent with master style students that are going to the many universities. Joey knows a thing or two about universities in Boston. Well, not in Boston, outside in Cambridge, yada, yada, yada. He went to Harvard. We get it. Anyway, so on to the next one. Brad, have you ever heard of Rentberry or used them? It seems like they do what PadSplit is doing also. Maybe Mogul can work with them also, or exclusive to PadSplit only.
Interesting. I actually haven't personally heard of Brent Berry. I don't know if maybe Michael has or if you have, Alex, but I will say one of the things that we love about PadSplit and one of the reasons why we actually have a lot of tenants that might be co-living tenants in the properties that we're looking to onboard on the co-living side, onboard to PadSplit is because they have really, really great verification tools when it comes to background checks, when it comes to income verification. Rentberry might do the same thing, like all these other co-living platforms, they might be doing the exact same thing, but PadSplit is very tried and true. And so right now, as we're kind of fully testing out the thesis, and we're in our I think 15th or 16th PadSplit now, we're definitely looking to make sure that everything is standard of quality and that we're not taking higher risks in terms of unlisted tenants. Again, tenants that might have had income verification issues or background issues, background check issues. So that's why we love the standardization of PadSplit, because they do all of that work for you as a platform, and that's why we continue to list PadSplit opportunities.
Yeah, I mean, it's also the ethos, right? It's at the end of the day, some companies might offer the same thing in the space, but maybe they're not going about it in the right way. And it's speaking to that exact guardrail. It's like there are other fractional investing platforms in the real estate space, but they might not be going about it in a trustworthy manner. It might be bad actors. Obviously, I can't name names, but a lot of them
Yeah,
are
no, for
horrendous
sure.
actors. And so it's really looking beneath the hood into the people that are running that company. Because a company, again, is literally, not to get philosophical here, but like Sapiens, right? It's, we basically can aggregate and come up with a shared goal. What is actually a company? It's literally just people that fictionally agreed to go after a shared goal, and we come up with a fictional entity document around it. And Pad Split is so cohesive in mission and so transparent in what they do. And I've never met a company where every single person, you ask them, why did you move to Pad Split? It's because they're mission driven. They want to make housing affordable. They want to make it
Yeah,
so that everyone can have housing. There's a shortage of housing, and they're willing to fight tooth and nail for what they believe in. And so they've done a tremendous job there. It's definitely a platform that we resonate on the mission side. So we will look into Rentberry, but we obviously will not just dive fully into it. We'll just look into it, fully diligence, vet it beneath the hood. I mean, there's a reason we didn't start out with just Pad Split, because we vetted them too before
right,
we even used them. And so
right.
that was the entrance.
And one thing I will say too is like with pad split, this might be like an ancillary benefit that they weren't targeting, but is very valuable as buyers, is that their income in terms of the property income, like the actuals achieved, we can verify that directly on the pad split platform pre-closing, right? So like people could submit, whatever income statements to us as a seller, but like how do we actually verify that that income is true? So PadSplit does a great job of that as well, just as an ancillary benefit. Is like if on PadSplit we're seeing that this property had actually performed at say $4,700 a month in income, we're going to actually see that that's been done over 12 months, and then can underwrite that going forward to be conservative on the business plan. So that's huge benefit as buyers, and definitely very protective. Yeah, just one of the things that we like to verify. So
And then obviously we're coming up on time here, but want to answer a few last questions. So feel free to jot them in the chat. This is for sure, Rupinder, thank you for the question. This is for sure a question for my CPA, but wondering, when one property is sold, an amount is auto invested to buy another property shares on the platform, is it considered 1031 exchange for tax purposes? So very high level, because getting into this, it is very intensive. We've gone at length with our legal team just to preface that. So there are a few ways that you can go about a 1031 with an LLC. It's called a drop and swap. And so a certain amount of threshold of owners have to agree to reinvest into another property. I believe it's a simple majority above 50% can then drop and swap into another LLC of choice. And then the owners that are basically selling out of the property, they would get taxed, but the people that continue to auto invest into the new property would not get taxed. So again, this is something, as we look to sell assets, we can put to a vote on who would like to retain ownership in a future property. And if this was the property, what would that look like? And so that's one thing to consider on LLC level investing. It's a little bit more nuanced than it lets on just selling property and buying into a new one. If you were to do it on an individual basis, drop on swap is a little bit tougher to achieve. Now, there might be some nuances and some thresholds that we could definitely speak to, where maybe a certain amount of property, if you own it and you drop and swap, you actually technically can do that. But that's something that we can discuss ad hoc as we kind of go, and we will give you every single option. We won't think through every single option. You can trust us on that, because real estate, I mean, we joke the IRS wrote the tax code to incentivize two things: procreation and home ownership. We can't help with the first, but we sure as hell can help with that second. And we're going to do everything in our power to make sure that that second is not a hindrance on you, but actually a benefit and accretive to your returns at the end of your investment. So we'd love to discuss that further as we continue along this path. And not to mention, too, there are other potential exit and liquidity provisions, whether it be refi cash outs or maybe even levering up
which are
against
not
your hold.
taxable, by the
Yeah,
way. Refi cash
yeah.
outs. Yeah.
Or levering up against your holdings and using those proceeds to, that's almost like a different form of a refi cash out, or pledging your asset in a whatever it might be. We are going to have a number of these things, especially as that secondary comes online. So obviously, if you definitely have any other questions, feel free to rattle them off here. But Joey, do you have any last words for the group as we approach time?
No, parting thoughts is we're really excited to bring you more of the top quality real estate on the platform, and keep a lookout for the next launches.
That was so generic. That was, but appreciate everyone's time. We are very excited for that, and it's been incredible to see the growth, and we could not have done it without you. Thank you again for you referring out to investors. Definitely continue to talk principal pay down. We don't do amortizing loans. We more talking about interest only loans because it's more accretive to the bottom line. Because again, we can get into that in the future one. But really appreciate everyone's time. Thank you everyone for joining, and
Yeah, thank
definitely
you.
be sure we will be following up with the recording of this. So thanks so much. Appreciate you.
Appreciate you.